So in this exercise, we're going to do a series of classic journal entries. So in government, the same kinds of activities tend to happen over and over. The dollar amount might change, some part of the story might change, but they are classic entries. And so we're going to do a series of classic entries, and they haven't included the dollar amount because the dollar amount's not really the hard part. We could make up a dollar amount, but we're just going to use X's for this particular one. But what we're learning is which fund will be impacted and then which accounts will be impacted as a way to getting used to the new chart of accounts and indicating which fund activity would go in. So the first entry is to set up the budget. And they tell you a deficit is projected. That means that expenditures are greater than expected revenues and transfers in. So let's set that up. So here we have the budget in the general fund. Notice that we're not going to budget for the bonds or for the fixed assets because liabilities and assets are not recorded in fund accounting. So we will be budgeting for the revenue, which is the taxes that they expect, property taxes, which they expect to invoice, and then for the transfers in that they're expecting. And then the appropriations control are the expenditures that they're expecting, and they're expecting the expenditures to be larger than the revenues. So that means that there's going to be a debit to the fund balance for that shortfall. So now let's look at the second one. A bond is being issued to fund the construction of a new building. So the construction of the new building is the dominant part of that. And so that signals what fund to use. So let's put that in. So when the bonds are issued, there would be cash coming into the capital projects fund, and they would show other financing sources, bond proceeds. What about C? They're ordering a computer. In fund accounting, when you place an order, you must encumber that amount against the budget. So they would debit encumbrances and then credit fund balance to reserve for those encumbrances. It's a way to set aside part of the budget to pay for this thing. What about D? Now we got the computer that we encumbered. So how does that work? Now we're just using X's here, but the amounts in these two may not match. So this reverses the encumbrance, and those two amounts will match. The expenditure control and voucher payable may or may not match exactly with what the amount encumbered. So when you order the computer, you may not have known how much the shipping was or how much the taxes were. You may know exactly the dollar amount, and so you may have encumbered exactly the amount that would be invoiced, but you may not. You may have had an estimate when you encumbered it. That's especially true for traveling for a conference or something like that, because the encumbrance is the authorization. You were given authorization to order this thing. So the dollar amount in the expenditure and vouchers payable here may or may not exactly match the encumbrance, but when you reverse the encumbrance, you must exactly reverse what you put in, regardless of the amount of the final receipt that you owe to the vendor. Okay, so moving on to E here. Now you're going to pay for that invoice, pay for that computer. This is probably the most normal entry, the most similar to what you're used to. Instead of accounts payable, you have vouchers payable, so a different name for the account, but you're just debiting the vouchers payable and crediting cash when you pay that vendor. All right, so now we have the city agreeing to transfer money from the general fund to a special assessment project. And here they've just agreed to it. They haven't actually done it. But once something's been authorized, it is typically transferred and affected into the fund in which the authorization occurred, kind of like the way you order the computer and you go ahead and do an entry. So that's very different kinds of things. But authorizations have impacts on fund activity. So let's put that one in here. So I don't think it's super clear that this special assessment project is a capital project. But if it wasn't a capital project, there wouldn't be any need to transfer it out of the general fund into a different fund. So we're going to put it in the capital projects fund. So we have two different funds affected because we're transferring from one fund to another. And so the general fund shows it as a transfer out and a due to. So it's like they're accruing it for something that's been incurred but not paid, to try to use some language from your prior accounting brain. And then the capital projects fund shows a due to, kind of a receivable, and that they have authorization or incoming revenue, if you will. So let's look at G. The City Council creates a motor pool to service all government vehicles. Money is transferred from the general fund to permanently finance this facility. So this is going to be a proprietary type fund. It's going to be an internal service fund. So this particular fund will be charging a fee to other government vehicles, but not to the public or to outside beneficiaries or participants. So let's do this. So we're going to show uses of funds coming out of the general fund, transfers out to the motor pool, and the cash is leaving. And then the cash is going into the internal service fund. Now notice we have contributed capital. Those proprietary funds, the enterprise funds and the internal service funds, are more similar to the for-profit accounting that you're used to. Those are the two funds that differ the most from the governmental funds. So they do have something called contributed capital. They're not owned by anything, but they do recognize startup or permanent capital to the fund. Okay, here we are with H. We've got some property taxes that are levied. We don't know how much will be collected, but a small percentage is estimated to be uncollectible. All right, let's set that up. You may remember in the prior class activity that when we sent out the tax bills, we had an amount that we thought might not be collectible, and we set that up in this allowance for uncollectible property taxes. And then at year end, we had to update that estimate, which changed the balance in the allowance and changed the revenue account. So this is the initial sending out of the bills, and there may be an update at the end of the year on this. That would be normal, typical, classic activity. Remember that these entries are classic things that tend to occur in governmental units, so that you can see sort of one of each kind of thing going forward. All right. The city collects grant money from the state that must be spent as a supplement. Okay, must be spent as. Restricted, right? You can't just do anything you want with it. So that goes in a special fund, right? That goes into special revenue fund, revenue that can't be spent on just anything. Let's set that up. Notice here that the story says that they're collecting grant money to be spent as salaries for police force, but we can put anything in that story, right? Must be spent as, and then we can, as the library, special collections, as cleanup for the downtown area, as a way to take care of adding sidewalks in particular neighborhoods, as a way to add green space to the downtown, right? Any kind of story can be put in there. The key is that you can't the grant was given and it has to be paid out in accordance with the grant stipulations, and therefore it's restricted and has to go in the special revenue fund. Okay, so this is a classic type of grant language that would signal, aha, I can't go in the general fund and spend it on whatever I want. It's not a general grant to the organization. It is a grant for something specific, and we have to honor that specific activity, and we can't put it into revenue, and we can't do what we want with it until we actually carry out the wishes of that grant. So we're getting the cash in, and it has to go in the special revenue fund because it's restricted, and it must be deferred. We can't even record the revenue yet until we carry out what we were supposed to spend the money on. And if we don't, we actually have to return the funds to the folks issuing the grants. So when that's relatively rare, because most organizations will do exactly what the grant told them to do. Okay, and then in J, a portion of the grant money is spent. So we'll be able to record some of that revenue and reverse a portion of the deferred. Not all of it, apparently, but a portion of it. So we've got, of course, the grant said that we were going to spend it on salaries, right? So salaries of the police force. So when we spend it, it's going to be salaries in cash. We're going to be paying out police force salaries. And then we will, the portion of it that was paid out, we can remove that from deferred and put it into revenue. So that is how we would record these various things with fund accounting. Now, what about government-wide? Government-wide is accrual basis, not modified cash, which is fund basis. And government-wide doesn't have separate funds. Government-wide means all the funds together as one entity. So let's do that. So for A, there would be no entry because they don't record a budget. For B, you would record cash coming in and bond payable. That would be what you would have expected before we got into the governmental accounting, right? That very traditional norm. So let's put this up here for you. Notice that we don't have to indicate a fund on these entries. Government-wide, it's not going to have individual funds, but in fund accounting, in the fund accounting financial statements, you have to indicate which fund you're making the entry to, but not in the government-wide. All right, there won't be an entry for C because ordering something is not an accounting event for accrual basis. So C would be none. Now D, when you got that equipment, you would set up the payable. So you would record the equipment and record the payable. Let's do that. So we could have also debited computer or computer equipment, something like that. So this is more traditional, except for we use vouchers payable instead of accounts payable because that's what governmental units call their accounts payable. They call it vouchers payable. All right, what about E? So now that this is the same under both, where you would debit the vouchers payable and credit cash. All right, what about F? So when something is agreed upon, it is no entry for accrual-based accounting. Just because something is authorized, there is no entry for that. The same thing for G. When you decide you're going to transfer, it's been approved and you know you're going to do it, but you haven't done it yet, no entry. What about H? So H is the same. The only thing different, of course, with H is you're not having to indicate which fund the activity is going through. And then for I, the entry is the same, except, of course, you don't have to indicate which fund. And then for when you spend the grant money, again, you don't have to indicate which fund. So here I've debited expenditures, public safety, but it could be salaries, public safety. Just depends on what chart of accounts you're working with. And then, of course, the credit to cash. And then removing from deferred revenue the portion that was paid out. And then you could recognize the revenue from the grants. All right. So the government-wide is closer to what you normally were doing in accrual basis with some different account names. Fund accounting, you have to indicate the fund first before you do the journal entry, and then there's some really different account names. So it takes a while to start getting used to these accounts, but these storylines in these entries are very classic. Even though I could change some surface details, I could change the computer to being some different item, I could change the grant for some different item, but they would still, that's still the bones of how you would do those kinds of things, how you would do the budget. If they had budgeted for a surplus, then this would be over here because the revenues would be greater than the expenditures. In order to make it balance, you would have a credit. So you can think through how these are classic examples of entries, and if I'd given you dollar amounts and changed the story slightly, you would have a template for how to record these. All right, keep going.